The sell-off intensify after Jay Powell's remarks a little bit earlier today on inflation. As you can see there, the NASDAQ down over 3% right now.
Hello, niece and nephew, this is Uncle Robert. What a week we had. Coming from last week's sell-off, Monday we see a rebound, oversold rebound. We see treasury rate go down and people start buying. But what happened the next 3 days? Treasury yield slowly creep up and every day there is selling. So today we're going to talk about what caused the sell-off, why is it happening, something that niece and nephew very interested in. A follow-up from last video, is ARK Invest calling the bottom? Stay tuned for that. What are the upcoming catalysts that could change the market? And in this turbulent time, what is the best thing to do? What is a safe haven? What is Uncle Robert doing? Please remember to hit the like button so this video can go to more niece and nephew. People are rotating out from high growth stock.
Immediately people pull out of growth stocks. That's a relationship we know. What we didn't know was that this kind of sentiment would reflect across sectors. So you saw it in tech, but now it's taking down utilities, for example. It's taking down materials, even financials, which are said to actually benefit from higher yields. And I think that's a really interesting dynamic that you're seeing, that across the board, people are really getting spooked.
For more information, you can see Uncle Robert video over here. Thursday, we have Uncle Jerome speaking. Usually, Uncle Jerome will calm the market. But now what happened?
Inflation, he says, is set to increase, but he says that's likely to be temporary. There'll be reopening effects.
Uncle Jerome mentioned short-term increase in inflation spooked the market.
And that inflation is meant to be transitory, meaning temporary, some of these rises. Why then do we see this market sell-off?
Doesn't matter what he say, doesn't matter what the Fed do. What matters is what the market thinks, and market thinks that Fed has lost control.
The Fed expects yields to rise. The market, however, wants protection from the Fed when it comes to inflation and higher yields. Powell didn't give it today.
Fed doesn't want to do more to protect us.
I think the market had some expectation in there that the Fed would have its back when it came to inflation rising and yields rising.
What happened on Friday? Jobs report exceed expectation. Isn't this good? This push up treasury rate even more. And guess what happened?
Treasury yields are going up for the right reason. And the right reason is that this economy is set to recover very strongly. And that's good for the stock market long term.
But throughout the day, you see reversal. Oversold reaction being bought. Can this continue? Is this the end or just the beginning? As niece and nephew can see from last video, ARK Invest has cash-like instrument, and they have used 20% of the cash-like instrument to buy the dip. What they say is, during a crash, they will concentrate on the high conviction names. End of week, we can see ARK Invest have mobilized 30% of the cash-like instrument. Plus, they sold PayPal 200 over million. We can see signs of concentration. So while ARK is doing what they say they're gonna do in a correction, ARK Invest may be thinking there's a bigger one coming. Uncle Robert will keep monitoring and share with niece and nephew what ARK Invest is doing.
Well, there are a lot of different ways to spot a bottom, and while a bounce might be in sight, it sure makes sense after all this relentless selling. An actual bottom, it may commit where you can commit a lot of capital. No, too many stages away to feel on solid ground.
There are several upcoming catalysts that could change all this. First will be big institutional investor, big sharks. When they see the value of this growth stock go down, this is a good bargain. It's time to go in again. There might be a rotation back into tech. Next catalyst is 1.9 trillion Biden stimulus. Looks like it's coming next week. While this is good for economy, some might think there will be a spike in inflation.
Now, I guess the question is whether or not that $1.9 trillion stimulus is really going to cause a snap up in consumption beyond maybe what the Federal Reserve is expecting. We're watching the 10-year yield spike up.
And that might have negative effect on the market. Let's wait and see. There's also something about bank reserve expiring. Check this out.
Meet Kevin also brought up a really good point that a policy which allowed banks to pretty much keep zero reserves is about to expire on March 31st. The TLDR version of this is that in March of 2020, banks were allowed to keep less reserves so that they could spend more money and loan it out to help stimulate the economy. But on March 31st, 2021, if that option is not extended, banks would have to go and sell off their treasuries to come up with that cash reserve. And in doing so, that would raise the treasury yield beyond where we are today.
And lastly, many months down the road after economy open, we can see inflation rise and then slowly die down. That would give everyone a lot of peace of mind. Niece and nephew might be thinking, what should I do now? Quoting Auntie Cathy again.
Taking profits is never a bad idea. Just keep some powder dry.
Niece and nephew need to have prudent risk management. Do not overstretch yourself. Reduce your margin. Do not go gambling. Do your due diligence to pick only the high conviction name with good future. Not everything gonna recover the same. Look at this example from Intel. After dot-com burst, it never recovered for 20 years. Not everything like Amazon. Niece and nephew need to know when to diamond hand, what not to diamond hand. This is very important. Please diamond hand wisely. Sneak preview on what Uncle Robert is doing. It always pays to diversify. This week we have OPEC news.
Energy is the only sector in the green.
And those energy names you mentioned in the green, that's really just a function of those OPEC comments you saw earlier.
Saying supply will be kept constant, but with reopening, demand for oil will keep going up. So this is how Uncle Robert diversified this week. Disclaimer, this is not financial advice. This is just for entertainment purpose only. Uncle Robert, just another dude on internet. Next video, Uncle Robert will cover who is hurt the most in this correction. Is it the shark
or is it us retail investor?
Stay tuned. If this is helpful, please remember to smash the like button and subscribe. This will help Uncle Robert a lot. Thank you so much for watching. Bye bye!